Hello, my name is Susma. Today I will be presenting for corporate accounting. Uh, I will be talking about the raising funds for corporate operation and liabilities, funds for uh, provisions, contingent liabilities, and contingent assets, measurement basis for assets. This assignment provides an understanding of different source of funds used by two selected companies for at least for for the last 3 financial years. This assignment also clarifies the evolution of sources and relates to the relative merits and shortcoming of funds by selected companies. This assignment also shows the light over the ASP 137 of provisions, contingent liabilities, and contingent assets. Also, this assignment helps to provide different categories of assets recorded by the selected companies and measurement basis used by the company for each class of assets. Uh, Identification of different source of funds by selected companies. Both companies, Star Group and Flight Center Group, uses internally and externally generated funds, namely share capital, retained earnings, and debt financial respectively. Both companies' primary objective are managing the available capital to ensure the group contributes as a going concern and provide optional return to shareholders. Uh, Evolution of sources of funds used by selected companies with a specific focus on the changes. In the recent year, both companies has initiated strategies to strengthen its balance sheet by measuring the internally generated source of funds by maintaining moderate level of debts. Percentage of funds generated internally and externally for both companies are in 2019 for Star Group. The internally generated fund is 76.84%, while externally is 23.16, whereas for Flight Center it is 93.46% and 6.54% respectively. Advantage of internal sources of funds are uh, provides an entity to gain power and control, improvement in the process of planning, the overall cost of all major project is reduced. Whereas the disadvantage is due to limited funds, the ongoing projects may take more time to complete. There are lesser taxation benefit for the company. Advantages for external financing. The taxation agencies offers various deduction upon the financial cost. The cost of financing is or interest rate are comparatively lower than the cost of equity. Disadvantage of external financing: the ability to repay the loans highly impact the credit ratings of the company. The company is required to have large pool of liquid funds like cash. Then the different types of liabilities shown in the balance sheet of the companies are trade and other payable interest bearing liabilities, income tax payable, delivery derivative financial instrument, deferred tax liabilities. Now, the provision under AASB 137 defines having two sections as a possible obligation that arises from past event to a present obligation. Different categories of assets recorded by the selected companies are cash and cash equivalents, uh, inventories, trades, and other receivable, uh, property, plant, and equipment, intangible asset, investment in joint venture. Mm, Now, Let's set the light upon the measurement basis for each asset for the selected companies. The selected companies uses the measurement basis for each asset, which are based on the fair value method. A quoted market price is an active market provides the most reliable evidence of fair value, and it is used without adjustment to measure fair value. To summarize, the companies have maintained healthy capital structure during the increased uncertainty about the economic outlook. This provides as a merit to the company that has initiated the strategies to strategies to strengthen its balance sheet by increasing the cash and maintaining moderate debt levels, with a view to create greater shareholder value in the future. Thank you.